Namaste. Let us discuss a new chapter, that is accounts of banking companies. Myself, Ramesh K, Assistant Professor of Commerce and Management in SDC College, Kolar. So in this video, I am going to discuss the concept of banking companies. So banking companies is a financial institutions that accepts deposits and channels the money into lending activities. It means banks accepts deposit from the public and channels the money into lending activities. That means transfer of money for the production activities. Here the final accounts of banking companies includes profit and loss account and balance sheet. The final financial year ends on 31st March every year. See, in this chapter you are going to learn how to prepare a profit and loss account and balance sheet. See, in all the companies, banking companies compulsory every year should prepare a profit and loss account and balance sheet. The main reason of preparation of profit and loss account and balance sheet to know the financial position of the companies and also to take some managerial decision, and also for the taxation purpose your banks will prepare the profit and loss account and balance sheet. So here the preparation of profit and loss account and balance sheet, that procedure we are going to learn while discussion of these banking companies. Okay. See, before going to discuss the preparation of profit and loss account and balance sheet, first we need to understand some theoretical concept in banking companies. Now come to the banking companies concept. Here books of accounts to be maintained by banking companies. Here all the banks compulsory should maintain every year these books or these ledgers. Here there are three main books are there: principal ledger, subsidiary ledger, other registers and memorandum books. A principal ledger, it's also called as a principal books. Subsidiary ledger, it's also called as subsidiary books, and other registers and memorandum books. Now we need to understand what are the examples of principal ledger and examples of subsidiary ledger and examples of other registers and memorandum books. Here principal ledger or principal books example: cash book and general ledgers. Cash book and general ledger. Here all the banks compulsory should maintain a cash book and also general ledgers should maintain every year. So this general ledger and cash book are the examples of principal ledger. Now come to the subsidiary ledger. Here subsidiary ledgers example: you are receiving cashier counter cash book and paying cashier counter cash book. Receiving cashier counter cash book and paying cashier counter cash book, and savings banks account ledger and recurring deposit account ledger, then current account ledger, then fixed deposit account ledger. Actually banks are providing four types of deposit facilities. Here fixed deposit, current account deposit, savings bank account deposit and recurring deposit account. For these four types of deposits, here banks compulsory should maintain a separate ledgers or separate books. Okay. And another example of subsidiary ledger, here cash credit ledger, here cash credit facilities are providing by the bank. For that here cash credit ledger is to be maintained, and loan ledger, loan facilities are providing by all the financial institution. For that here bank should maintain loan register and also investment ledgers. Here banks may invest their money for other activities, some activities. So for that here investment ledger also should be maintained by the banks. So these are the examples of subsidiary ledgers. Now come to the other registers and memorandum books. Here other registers and memorandum books are demand draft register, jewelry register, safe custody register and locker register. Here safe custody, locker facility, safe custody facility are providing by the bank. For that your bank should maintain the other registers and memorandums. See, these are the examples of other registers and memorandum. Here examples of other registers and memorandums: demand draft register, then jewelry register, safe custody register and last locker registers. These are the examples of other registers and memorandum books. Here all the banking companies compulsory should maintain these books of accounts. Okay, now come to the next concept, that is features of bank accounting. See, the banking companies have to maintain books of accounts under double entry system. Here all the banking companies have to maintain their books of accounts under double entry system. Here the banks compulsory should maintain a double entry system of bookkeeping, okay, while maintaining a books of accounts. Then it has to maintain all books of accounts are required the provisions of the Banking Regulation Act 1949. Here, while maintaining books of accounts in banking companies, they should follow the provisions of Banking Regulation Act 1949. And next, posting of transactions in ledger will be based on the debit or credit slips. While posting the transaction, transaction related banks, while posting to the ledger or to the journal, here based on the debit and credit slips, here transaction should be post. Okay, self-balancing system of ledger is followed in accounting by banking companies. See, these are the features of banking accounting, bank accounts. Now come to the topic of provisions of the Banking Regulation Act 1949. Here some important provisions are there. We need to understand the provisions. Okay, it's a very important. See, a banking company can issue only the equity shares. Here the banks will issue only equity shares. We do not issue the preference shares like redeemable, irredeemable preference shares, participant preference shares, non-participant preference shares, cumulative preference shares, non-cumulative, convertible and non-convertible preference shares. Here banking companies can issue only the equity shares. And next, come to the statutory reserves. So next provision of Banking Regulation Act 1949, statutory reserves. Here according to section 17 sub 1 of the Banking Regulation Act, every banking company incorporated in India must transfer at least 25% of its annual profits to the statutory reserves. This condition is to be followed. Here all the banks every year 25% of its annual profits should transfer to the statutory reserves. Okay. Next, cash reserve ratio, that is CRR. Here the cash reserve ratio is presently 4% is there in our India. The Reserve Bank of India has the power to increase the percentage up to 20%. Increase the percentage up to 20%. And next, come to the statutory liquidity ratio, that is SLR. Here the every banking companies must have to invest 25% of its time and demand liabilities in gold and securities. Here banks should invest 25% of its time and demand liabilities in gold and securities like shares, debentures and bonds. This condition is to be followed by banks. And next, no banking companies shall hold shares and debentures of another banking companies. Here that means your bank should not hold the shares and debentures of another banking companies. Next, according to section 15, no banking companies can be declared and pay dividends until all capitalized expenses have been completely written up. Until the capital expenses written up, your banking company should not declare any dividends. Okay, should not declare any dividends to the shareholders. Okay, so these are the provisions of the Banking Regulation Act 1949. Okay, now so let us come to the discussion of format of profit and loss account and balance sheet. Here in this chapter we are going to learn how to prepare a profit and loss account and balance sheet. See, profit and loss account, for profit and loss account there is one format, and also for balance sheet also there is one format. So while preparing profit and loss account and balance sheet, we need to follow some schedules. Here you should be perfect in schedules. Here totally there are 16 schedules are there. By following these 16 schedules, we are going to prepare a profit and loss account and balance sheet. Here in profit and loss account, sorry, in balance sheet, among these 16 schedules in balance sheet, we are going to consider 12 schedules, and schedule number from schedule number 13 to 16 we are going to consider while preparing a profit and loss account. Okay. Now let us come to the discussion of format of balance sheet, that is a Form A. Okay, so this is the form of balance sheet. This is a format of balance sheet, Form A. Here it is a vertical balance sheet format. First we need to consider the capital and liabilities. Now come to the first, schedule number 1, capital. See, capital, actually under capital we need to consider share capital. Okay, share capital, under share capital is authorized capital, issued capital, then subscribed capital, called up capital and paid up capital. These information we have to consider under the head of schedule number 1. Then come to the schedule number 2, that is reserves and surplus. Actually there are many types of reserves out there, that is statutory reserves, then capital reserve and share premium and revenue and other reserves. Here opening balances and additional during the year and deductions during the year. So these informations are to be considered under schedule number 2. Here schedule number 2 is reserves and surplus. Here schedule number 1, capital, that is share capital. Schedule number 2 is a reserves and surplus. Under reserves and surplus, statutory reserves, capital reserves, share premium and revenue and other reserves, and also balancing profit and loss account. In profit and loss account, balance also is to be considered under the head of reserves and surplus. Now come to the schedule number 3. Schedule number 3 is deposits. Actually deposits, savings deposit are there, and term deposits, and also so here sometimes we need to consider deposits of branches in India and also deposits of branches outside India. Okay, see all the deposits we need to consider in schedule number 3. Okay, why it's a liability? Actually deposit, why it's a liability? See, deposit, actually public will do the deposit, so after that we need to return back to the public, right? So that's why it's a liability. Next come to the borrowings. Here borrowings, it's a schedule number 4. Schedule number 4 is borrowings. Here borrowings in India and also borrowings outside India, both is to be considered. Okay, in schedule number 4. Here the borrow means, here sometimes the banks may borrow money from other financial institution, that is to be returned. That's why it's a liability of the bank. Borrowings in schedule number 4, it's a liability. The next, other liabilities and provisions like bills payable and inter-office adjustment and interest accrued, then others like including provisions. Okay, so these information are to be considered under the head of other liabilities and provisions. Here other liabilities and provisions is a schedule number 5. Okay, so after considering these 5 schedules, we will get the total. Okay, after considering these 5 schedules, assets is there. Here assets starts from schedule number 6 to 11. Okay, and contingent liabilities actually we need to show separately. Okay, let's come to the assets. Here cash and balances with the Reserve Bank of India, it's a schedule number 6. Here cash and balance with the Reserve Bank of India. Here the bank will deposit in a Reserve Bank of India. Okay, it's a schedule number 6. And next, balance with banks and money at call and short notice. Balance with banks and money at call and short notice. Balance with banks, balance with other banks, it's also an asset. Okay, so whenever the money is required, here other banks will repay to the banks. Okay, money at call and short notice also it's an asset. Then next, investments. Here investments we do by the banks, so it's also an asset of the banks. Here investments in government securities and other approved securities, and also shares, debentures, bonds. Okay, so that's why it's an asset. Investment is an asset. It's a schedule number 8. These information we need to consider in schedule number 8. Then next, see, sometimes investment may investments may did in outside India. So here like outside India, government securities and other investments. Okay, so these information we need to consider in schedule number 8. Schedule number 8, that is investments. Next, schedule number 9 is advances. Here advances like bills purchases and discounted and next cash credits, then overdrafts and loans repayable and demand. Here overdraft facility is providing by the banks, that is to be considered as advances, and also cash credit facility also is providing by the banks, that is to be considered as advances. Okay, the next come to the schedule number 9. Schedule number 10 is fixed assets. Schedule number 10, fixed assets. Fixed assets like premises, land, building, furniture, machineries. Okay, so these assets we need to shown under the head of fixed assets. The next, other assets. Here other assets, here inter-office adjustments and interest accrued, then a tax paid in advance or tax deducted at source, then stationery and stamps. So these is to be considered under the head of other assets. Okay, so after considering these schedules like 6 to 11, that is 6, 7, 8, 9, 10, 11, will get the total here. So total capital and liabilities, total amount of capital and liabilities and total amount of assets should get equal. Okay, should get equal amount. Okay, then last, after considering these 11 schedules, in balance sheet compulsory we need to mention contingent liabilities. Here contingent liabilities actually schedule number 12, and also bills for collection also we need to show. For bills for collection there is no any schedule number. Okay, but for contingent liability schedule number is there. Here contingent liabilities, example, claims against the banks and liabilities per party paid investments, and then acceptance and endorsements and other obligations are the examples of contingent liabilities. Okay, by following this pro forma will be going to prepare a balance sheet. Listen here, in banking company while preparing a balance sheet we need to follow a vertical balance sheet format. So vertical balance sheet format is like this. Okay, here particulars, then schedules, then current year and previous year. This is the format of balance sheet. Now let's come to the format of profit and loss account. Listen here, it's a form B, that is form of profit and loss account. So for the year ended for the year ended 31st March, the year you should maintain. Then here also schedule numbers compulsory we should mention, and current year and previous year. So while preparing this profit and loss account we have to consider only 4 schedules. That is schedule number 1, schedule number 13, interest earned, schedule number 14, other incomes, and schedule number 15, interest expended and operating expenses. Here provisions and contingencies, for this there is no any schedule number. Now come to the interest earned. Like interest earned, here interest and discount on advances or bills, then income on investment, and interest on balance with the Reserve Bank of India and other interbanks funds. Okay, so these information we need to consider under that is schedule number 13, interest earned. Okay, interest or discount on advance or bills, income on investments, and other interest or other interbank funds. Okay, next other incomes. Come to the other incomes. Here other incomes actually commission, then exchange and brokerage, and profit and sale of investments. Actually in profit and sale of investment we need to deduct the loss of sale of investments. Okay, so loss of sale of investment actually is to be deducted at present the profit and sale of investments, and also profit and sale of land, then building and losses. In case is any loss on land and building other assets is to be deducted here, and also income earned by way of dividends, that also is to be considered in schedule number 14. Then miscellaneous incomes is to be considered in schedule number 14. Okay, actually these two schedules, schedule number 13 and schedule number 14, we need to consider under the head of income. Actually, while preparing a profit and loss account, your four headings are there. That is income, second heading expenditure, then third heading profit and loss, and last appropriations. These two, 13 and 14, we need to consider under the head of income. Okay. Next, you have to make the total. Then you come back to the second heading, that is expenditures. Your expenditures actually schedule number 15, interest expended. Here interest expended, examples of interest expended, interest on deposits. Okay, interest on deposits. Actually the public will do the deposits, for that the banks is to pay some interest. Okay, interest expended. And interest on Reserve Bank of India, interbank borrowings. So these are the examples of interest expended. So this information we need to consider under interest expended. The next come to the operating expenses. Here operating expenses like payments and provisions of employees, then rent, taxes, then lighting, then printing and stationery, advertisement and publicity, then depreciation on bank property, then directors fees, allowances, okay, and law charges, postage, telegrams and telephone, etc. Then insurance also, then repairs and maintenance and other expenditures are the examples of operating expenses. These all operating expenses we need to consider under schedule number 16, that is operating expenses. And last, provisions and contingencies. Here if any provisions and contingencies given the problem, we need to show separately. For that there is no any schedule numbers. Okay, so after considering these two, so we will get the total amount. Okay, we will get the total amount, then we have to go back go to for profit and loss. Here net profit or loss for the year and profit or loss brought forward. If any profit or loss amount in last year, that also we need to brought forward here. And next year, current year, while preparing a profit and loss account, we may get profit or loss, that also should consider under the head of profit and loss. The next come to the fourth heading, appropriations. Here and under appropriations, the transport to statutory reserves, transfer to other reserves, transfer to government or proposed dividend. Okay, here in profit, in current year profit actually to the statutory reserves, how much we need to transfer. So while explaining theoretical concept, accounting provisions in some provisions in accounts of banking companies, 25% of the statutory reserves is to be transferred, 25% of net profit is to be transferred to statutory reserves, right? Here also, here 25% of the amount is to be transferred to the statutory reserves. And next, transfer to other reserves. This information we may get in adjustments or problem. Okay, that is to be compulsory, is to be follow. And transfer to government or proposed dividend, paying up dividend to the declaring dividends to the shareholders, that is to be considered under the head of appropriations. After transferring these after transferring the statutory reserves and other reserves and proposed dividend, we will get a balance amount. That balance is to be shown here, that is balance carried over to balance sheet, and after that total. Okay, so by following this format, we will be going to prepare a profit and loss account. It is a form B. Okay, while preparing this profit and loss account and balance sheet, we will be going to get a financial position of the company. Okay, financial position of the company. This preparation of profit and loss account and balance sheet procedure we are going to learn while studying of these accounts of banking companies. Okay, so here schedules are very important. You should perfect in schedules, then only it will be easy to solve the problem. Okay, today I am going to end this session. Okay, next class we will see. Next class I am going to discuss about the schedules. Okay, about the schedules. Thank you very much.